Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming live in YouTube. We have a really fully loaded day today with a lot of meetings. Chairman Powell and Secretary Yellen are going to be talking about, the economy, interest rates, and how we are dealing with this Delta variant. So it's going to be interesting as we move forward throughout today. Also, some of the numbers that are coming out regarding inflation seem to be much, much higher than expected. The 10-year note has risen above 150, and we'll take a look at pretty much what's going on here in relation to Bitcoin as well. And the tremendous amount of bottleneck that we are finding in terms of supplies. In California, it seems to be around 65 ships that are stuck that can't deliver the goods. So it's critical as we move into this holiday season, obviously, in terms of the availability of supply. But it definitely indicates, based on some of these numbers here, and I think Chairman Powell and Secretary Yellen will address that today, that inflation is running higher than expected. And I think we want to see what his approach is going to be with regards to tapering, with regards to raising interest rates. So it's got the markets pretty much in a volatile environment, a lot of red on the screen, and we want to see basically what as the day progresses, what this fundamental news that is already without any announcement creating some kind of a tantrum in the markets. So it seems the markets are anticipating the possibility that interest rates are going up. And it came into the metals markets. As you can see, it affected the metals markets. And we saw the gold price now make a low of 1727.80. One of the things I want to point out that seems to be a general consensus out there, that if Chairman Powell raises interest rates, it's going to be bearish for the gold market. And I wanted to pretty much take a look at the last time that, or the first time that the Feds raised interest rates was back in 2015, 2016, around December of 2015. And what you see here is that essentially that was the bottom of the gold market. And it was trading around 1066 was the low. And what we saw here was the bottom of the gold market that rallied all the way up to 2018. From 1066 all the way up to a high that was made of 1385. And then from 2018, from February, early February of 2018, we came down to August of 2018, where we made this major bottom at around 1200, and this rally lasted till August of 2020. That, mind you, in between, we saw the crash of 2020. But when you look at it in the overall bigger trend that we're looking at, this was accelerated and essentially made the first leg of this bull market. And what I'm trying to point out to you is that the fact that interest rates could be going up here is very, very bullish for the gold market, particularly if we are dealing with unexpected inflation or higher inflation than expected. So if we take a look at the If we take a look at the 10-year note, it's running at about 154. 154, 155, and it's pretty much in anticipation that possibly this is a reflection of an accelerated rate of inflation, higher than expected. And since we broke the magic 150 number, obviously 175 is the next target, and it seems to be in a bullish trend. Now, what the Feds are going to talk about today, and Secretary Yellen, and we have a lot of issues that are pending, and another one is that the debt ceiling is ending October 18. You know, we have a lot of major issues on the table to deal with economically, with regards to monetary policy, inflation, and stimulus. There's another $3.5 trillion on the table. And I believe it probably will get approved sometime this week. So a lot of fundamental data is coming into the market. And obviously it's causing a lot of volatility, a lot of nervousness, major liquidation in the equity markets, panic selling, which is really one of the best things that is happening into the market, is to get this highly leveraged speculation out of the market, which is pretty much building a huge bubble. And particularly if the Federal Reserve agrees on raising interest rates, that could be pretty bearish for most stocks, or I would say for most investments that are highly leveraged across the board. So I believe what we're seeing is the beginning of an adjustment, recalibrating basically to the possibility that interest rates are going up. The question is how much and how fast. And this is the what I refer to as the momentum. And, it seems that interest rates, if you take a look at the 10-year note again, when the low, it was in the 110, 120, and we're at 150 right now. That's a 30% increase easily, relatively fast. So let's come back here to the markets and see how I as a self-directed trader, taking into account all these fundamentals, I'm looking to monetize, capitalize out of this situation. For day traders, if you don't have a signal, obviously you're coming in here and you're taking a look at the price, trading in the blue zone that I call. The blue zone is the area where the AI or the algorithm identifies that you should be accumulating supply, longs, looking to buy the market. And so I'm going to share this with you as a GPS, the way that you would identify coming into a day trading session without a trade. How do you identify entry point, exit points in pretty much the highest probability to execute a trade? And so we are trading in between the weekly level of support and the daily level of support that we call buy two. These are levels where, if activated, and the algorithm gives you precise entry points, if the market trades above 1736, it will activate a buy trigger, as it did down from the weekly level early this morning. And we've been pretty active here this morning in our trading room, in our live trading room here. We've been able sometimes to catch some of these moves relatively early. And I provide, these are trades that I do for the benefit of myself, for the benefit of my traders, subscribers, and those that basically are in my private trading room, because the information is relatively quick, particularly if you're looking to short-term trade or swing trade. We provide literally 23 hours a day this kind of information. And you can see here pretty much where we initiate some of these trades, where we initiated some of these trades earlier. We went long silver at 22.17, and automatically we provide the target and the stop level. We have a specific format that my traders here follow, and we show and execute why, the trade was activated. In this case, you can see the market reacted from the silver buy two level of 22.16. And the initial target was 22.42, which essentially was completed. So the gold market is in an area where mathematically it's a high probability area to look for buying or trading basically from the long side. And either the market is going to come down again to 1729 or it's going to go above 1736. So that's what you wait for, are those signals. Let's go to silver. The silver market as well has been pretty active here since this morning. At about 5:45 a.m., it activated a buy trigger from the daily buy to level that I pointed out to you before a couple of times. It negated and then it activated again by closing above it, and this is when we went long. Actually, we took this long back here and held through. Recommended to hold on to the position. We were using initially the 2216, but when you enter in the blue zone, once again, and particularly when you're taking a look at the buy two level right below, there's a high probability that a reversion will unfold as it did here. When it does, we give you three choices of stops to use. Do not use a straight stop. And the targets are completely identified above. In this case, 2240 was the initial target, and 2253 was the weekly mean or the weekly target also that you could use. You can use the targets in between the signals, daily or weekly. So what you see here is I trade the harmonic relationship and probabilities, basically, mathematically. And the more the market comes down into this blue area, particularly the B2, on a daily basis, it's a 95% mathematical probability that what we will see is a reversion unfolding, like we did here. So, as a self-directed trader, what I choose to do is trade the highest probability trades. And this is what I recommend traders in my room, as the market fundamentally, it is in complete chaos. Trying to figure out tapering, delta variant, stimulus, and interest rates. So the market will identify and work itself out through this fundamentals, you might say. But it does create the volatility that we feel makes the algorithm more accurate. We have another situation that seems to be unfolding here with regards to Secretary Yellen declines to take IMF chief calls in scandals wake. It seems that, let me see if I can share this with you. It seems that Treasury Secretary Janet Yellen has declined to return calls from the beleaguered head of the International Monetary Fund, Kristalina Georgieva, since a scandal broke, indicating that the Biden administration withholding of support for her goes beyond its public statements. Since Georgieva was accused earlier this month of improperly intervening in a World Bank report in her prior job there, she had made attempt to speak with Yellen, but has failed to get through. People familiar with the matter said speaking on the condition of anonymity. The report from law firm Wilmer Hale, commissioned by the World Bank, alleged that Georgieva, who took the help of the IMF in 2019, pressured bank staff to boost China business climate rating. This is I think, a black swan building up with regards to the IMF, particularly as Yellen and the IMF worked out pretty much a plan. The U.S. and the IMF worked on initiatives, including the fund planned 650 billion global reserves injection. In addition to all of this individual stimulus that is coming into the markets. I believe, just to come back here to reality, I believe the debt structure is completely out of control. And everybody is running and trying to figure out how to deal with it, how to pay, simply just for the interest. Monetizing interest payments just to stay alive. And, the fact of the matter is that we're running into a hotter than expected economy. There is more demand than expected. And the bottleneck in the supply chain is causing inflation to spike. And, our chiefs are pretty much indicating it's transitory. Let me tell you that I believe we have wage pressure building up on top of all of this. Price increase, inflation, we have monetary inflation, and we have a bottleneck in the supply chain that seems like it's going to last quite longer than anybody's expecting. So once again, we're moving into a highly volatile period of time, particularly depending upon, the availability of supplies. It's going to determine the kind of demand that we're going to have as we move into Christmas, the holidays. So I recommend here to stay long the metals and stay long gold, silver. Hold on to your long-term position. And I think we are also beginning the 360-day cycle that starts today, September 28th. What I want to share before I run out of time here is basically a report that we're pending to be publishing here real soon in the Associated Press, and I just wanted to share with you here in terms of the Bitcoin market.
Equity Management Academy. September 27, 2021. Bitcoin, Moment of Truth. Evergrande Black Swan. The market has been trying to discount the Evergrande news, the Chinese company that is about to default on billions in liabilities. It remains to be seen if the government will bail out the company. If no deal is forthcoming, there will be volatility in world markets. According to the NY Times, control of the banking system gives Beijing the tools to stop a broader collapse, officials believe, while censorship and police powers can stifle protests. The financial world is watching the struggles of China Evergrande Group, one of the largest property developers on earth and certainly the most indebted. Last week, a deadline to make an $83 million payment to foreign investors came and went with no indication that Evergrande had met its obligations, raising questions about what would happen if its huge debt load went sour. China announced a ban on cryptocurrency transactions, the latest in a series of crackdowns on virtual money that comes as countries around the world are considering tougher regulations of their own. Bitcoin. Bitcoin has almost regained what it lost last week. It is showing resilience. It is trading around the weekly average price of 43,687. The weekly initial targets are 47,153 to 51,222. Which are levels that represent areas of resistance or distribution of supply. Supply is likely to come into the market at those levels. If Bitcoin goes above the sell levels, then they become support for the next higher fractal in price. Our proprietary robo-advisor, Nikki the Robot, relying on our AI algorithm, the Variable Price Momentum Indicator, VCPMI, reported that for Bitcoin, the weekly SMA of 44,943 is bearish. The weekly VCPMI of 43,687 indicates a bearish price momentum. A close above 43,687 stop will negate this bearishness to neutral. If you're short, take profits at 39,618 and 36,152. If long, exit at 47,153 and 51,222. We are trading around the weekly average, which is a choppy area. We have come up from 40,802, which was the VCPMI daily buy signal. The daily and weekly targets, which is the weekly average price, were completed. The signal for day traders is neutral right now. The market is most likely to trade at the extreme above the average price of 47,153, or come down to the level of 39,618. The buy level is where buyers are likely to come into the market and where you want to accumulate long positions. When you go long, you can put a protective stop on a close below your entry pivot point. We do not recommend using straight stops, because if you do, you are likely to get stopped out. You can also choose to use a maximum dollar-based catastrophe stop. We use a $1,000 maximum catastrophe stop on our trades. Your amount will vary, depending on your comfort level. The third option is the level below, which is the buy to level on a close below. When the market is trading around the average price, there's a 50-50 chance of it going up or down, so we do not trade when markets are trading around the average price. We wait for extreme prices, when the trades have higher probabilities of success.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ematotrade.com, or listen to any of our previous episodes.
I wanted to share that with you as Bitcoin appears to be trying to find a floor in this space, which is being affected right now by the news. A couple of things. Obviously, the Evergrande potential crisis unfolding, which could be a massive default of in excess of $300 billion in liabilities, and also the basically elimination of the digital market in China. It is illegal now to trade cryptocurrencies in China. So we're getting hit with a tremendous amount of policy changes, regulatory implementation, and economic, fundamentally, chaotic, you might say, in terms of trying to identify our way through these markets with regards to inflation, with regards to interest rates. Let's go back to the gold market, and we are seeing obviously the continuation pattern that is being created right now. It's activating a buy trigger 1736. Now the target is at 1743. I want to just alert you that I believe we are going to be entering an extremely high level of volatility, and you want to measure your entry points accordingly. And if you're trading the VCPMI, I believe that it is the best instrument that you can use to trade the market, using it as a GPS. How you apply in your own portfolio depends upon your profile, your skill and your profile to be able to implement this in a very intelligent way. Once again, my friends, thank you for the great opportunity to share this live information with you here. Stay long. We are making a 360-day cycle low as we speak today.